Hey, this is Danielle. In today's trade review, I'm going to show you how I'm going to close a bearish QQQ butterfly that I did in the simpler trading options room. So this was a bearish fly, and I placed it on Friday right before the market closed. The center of the fly is at 460, which means that I was targeting a move down into 460. The expiration date is today, so this is basically just an overnight fly, even though it was, going from Friday into Monday. It's a fly with Monday's expiration in mind, so it's basically just a pretty quick flip of a trade. Right now, you can see that I bought it for 256 and it's going for 544. It's a little bit more than 100%. So basically what happened here is and I'm gonna actually just gonna go ahead and close it because we are starting to see, the ticks pick up and a little bit of buying here. So let me go ahead and close it. Looks like we have a spread here between 540 and 546. So I'm gonna try to bid at the top end of the range because, anytime you try to sell something, you want to sell it for as much as you can. So let's go ahead and see about that. Okay, so I'm already filled. Okay, anyway, so I'm out for 548. Now let's go ahead and look at the charts. Oh, actually I have to post the alert here in the trading room. Go ahead and show you. Just post it right here. Say to close, taking profits on my QQQ short from Friday. Go ahead and send that. So one of the reasons why I wanted to take this off is because we're starting to see some buying coming through. This is my market internals grid. When you look at the market internals, the most important thing to note, I think, is the fact that the ticks are coming up into this range up at the plus 600. When you have a butterfly on that's going to be expiring that same day, it's going to be highly sensitive to any kind of price movement. And if we start getting a bunch of buying, the profit from that fly can evaporate pretty quickly, especially if there's a big bounce back in the indexes. When you look at the NASDAQ here, you can see that we're making a new high on the day. So this is going to be the intraday price action. This is going to be the overnight price action. And so essentially we're coming up and we're just making a new high on the day where you have that, where you're seeing those major ticks. If you look at the vol spread, you can see we have incoming volume. Another important thing to note is that the put call ratio is pretty high. The intraday put call ratio is at 0.92. So basically that just means that a lot of people out there are short. And so what can happen is, when people are short, and then somebody starts to cover, more people start to cover, more volume starts coming into the buy side, the market can rip pretty high pretty quickly. So just want to go ahead and take profits on the short. Now, if we go back and we look at the original setup where I will demonstrate why I got into this to begin with. This is a QQQ daily chart. On Friday, price action was pretty weak. You can see that, we had a big down day on Friday and we were basically down here at the lows. We closed near the lows as well. So the reason why I put on the butterfly was because I had some Fibonacci levels at 460 that gave me a nice price target. There was also a lot of high open interest there. And I just felt like, given the ongoing news situation and the fact that the technicals were laying right on the dead lows and we closed at the lows, there was a pretty good likelihood that we would gap down over the weekend. So we did gap down. We traded down into that level. You can see that the gap actually went as low as 457.33, kind of worked our way higher. And then as it got up above 460, I went ahead and took off that butterfly. So that is my trader view. That's a trade I did in the options room at Simpler Trading. Hope you have a great rest of your day, and I'll see you in the next one.